Hello, and welcome to Context Conversations. I'm Eric Knoll, CEO of Context. Thank you for joining us. Today, we're thrilled to have with us Michael Crane. He is the co-founder and co-CIO of LaneGate Advisors. And they're going to discuss with us today, or he's going to discuss with us today, life settlements and life insurance and opportunities for investors in that space. Michael, as many of you know, is a well-known expert in the life settlement space. He's had an illustrious career at many famous Wall Street firms, as well as worked for Berkshire Hathaway. He's a recognized industry expert in the space. We're thrilled to have him with us today. Michael, thank you so much for joining us.
My pleasure, Eric. It's nice to see you.
So a lot of our investors and viewers and the people who will be seeing this, they want to know, how did you get to where you are today? And what drove you to do this and to establish this company?
That's a good question, actually. I started my career on Wall Street working mostly in debt capital markets, working in areas like the securitization of financial assets, and I later moved on to derivatives. But a hallmark of my career is I've always been more interested in the more complicated or more complex and interesting financial products. When I did securitizations, I was always known for doing off-the-run securitizations of unusual asset types. So I first heard about life settlements, or the secondary market for life insurance, back in the late 1990s. And I was fascinated that this was actually an option that consumers could exercise. They could actually find a secondary market for life insurance policy if they didn't want it or need it anymore. After 25 years or so on Wall Street, my partner and I, Brian Cooper, decided to start LaneGate Advisors a couple of years ago to offer these kinds of investment strategies in the life insurance markets, which we feel are asymmetrically in favor of the investor. And our fund offers basically an underutilized, non-correlated investment that provides above average returns for investors while delivering a vital benefit for people in need. And we do this by investing in life insurance policies.
Many of our investors may not know much about the life settlement space. So maybe a little background about how did you find out about life settlements and this space, and really what you think the opportunities are for investors.
Sure. I first heard about life settlements about 20 years ago when I was approached by a life settlement company that was looking to raise capital to buy life insurance policies from individuals. And as I said, I was very intrigued by this. And what it basically is life settlements is the term for the secondary market for life insurance in the United States. There was a Supreme Court decision back in 1911 that said that life insurance can be treated as personal property. You can borrow against it, or you can sell it. And that turned into an industry in the 80s and 90s. And I got involved in about 2001. And it's a very simple transaction. Somebody who has a life insurance policy and he or she has decided for whatever reason they don't want it anymore, or they can't afford to pay for it, they now have the ability to offer it out into the marketplace and get a variety of bids from potential investors and transfer ownership of that policy in return for an upfront payment, which in certain circumstances can be tax-free to the individual seller. The purchaser takes over the premium payments on the policy, and when the person passes away, the investor receives the benefit on the policy. It's a very simple kind of transaction. I began buying policies back in 2001. I worked for a company called General Re Financial Products, which was a derivatives trading company, but we were owned by a very large life and health reinsurance company called General and Cologne Re. And we got permission there to start buying policies in 2001. One of the fun points of that transaction for me was I had to get approval in the end from Mr. Buffett himself, because it was considered sufficiently unusual kind of transaction. Now, that was 21 years ago. And now there are regulations that protect individual sellers in the different states. There's 45 states that regulate the sales of what are called viatical settlements when someone has a life-threatening illness. And there are 43 states that regulate the sales of policies by just older individuals. So it's a heavily regulated business now, the way it wasn't a number of years ago. After I got started buying policies in the early 2000s for Gen Re, I was later recruited by Deutsche Bank to set up and run a proprietary trading desk around life settlements based in London, England.
So, as an outside observer, as an asset class, this feels to me to be almost completely uncorrelated to the equity markets and other asset classes out there. So, maybe you could talk a little bit about some of the attractiveness as an asset class and whether in fact there is no correlation between this investment and other asset classes?
It's also a good question. Well, as a veteran of the capital markets, I will tell you that although different risk factors can be uncorrelated, if everybody wants to sell everything all at once, correlation factors all go to one. Having said that, the risk factor in life settlements or the risk factor in life insurance is not the same as it is in the other markets we're used to seeing investing in. So equity markets, fixed income, currencies, real estate, all of those have variables that go up and down depending on different elements of the economic cycle. And life settlements or life insurance is not linked to any of those factors. You're looking at mortality trends over long periods of time. And so to answer your question, it is very much uncorrelated or unlinked to other traditional market asset classes. I think that's the primary reason people are interested in it, because it's just different and it's not going to move in the same ways. It's not going to be as volatile as other markets. I think the second reason, Eric, that people have been looking at life settlements more recently has been that the returns are very attractive too. So setting aside the lack of correlation, people are earning, in certain strategies, sort of the high single digits. Our strategy aims to be in the mid 15s, 15 to 20%. Those are very high absolute returns in any market, particularly in the interest rate environment we've been in for the last few years. So I think it's a combination of lack of correlation and attractive returns has made this an increasing option for investors looking to diversify.
So there are obviously other life settlement companies out there and people who are investing in this space. So talk a little bit about Lane Gate's, sort of strategic advantage. What's your edge?
Well, Lane Gate Advisors is owned by two individuals, myself and Brian Cooper, my co-founder and co-chief investment officer. And we come from two different worlds. So I come from the institutional investment banking debt capital markets world. And my partner, Brian, comes from the life insurance industry, specifically and directly. So we've been able to mesh and meld our expertise in a way that I think relatively few asset managers in this space have been able to in the past. And because of our deep knowledge in life settlements in the secondary market for life insurance, we actually focus on a couple of subsectors of the market that other people either don't have the time to or don't have the interest to investigate. So we have a two-part strategy at the moment. The first of which is we buy policies from people with relatively short life expectancies. We will go all the way out to 36 months, and we're looking for people with clinical illnesses that have very low risk for us as an investor and where we're giving a significant benefit to the consumer. We also buy portfolios of policies from distressed investors who are unable to keep funding the premiums they have to pay to keep the policies in force. And we've been able to acquire portfolios at a very attractive levels that way, which has enhanced our returns for our clients.
So that leads me to my next question, which is really life insurance typically is a retail product, right? So I have a life insurance policy as a person. How do you source these assets?
We get this question a lot, Eric. And the short answer is we don't find the policies. The policies find us. We don't troll for people who are looking to sell their policies. People who have decided that they might want to sell their policy either because, again, they no longer need it or because they're looking to generate some cash, they will reach around and find life settlement providers, which are the licensed companies licensed by the insurance departments of the states I talked about before that regulate these transactions. And those providers will ask them to provide a medical records release form. Typically, they will go and then get copies of the medical records, which are used to get a third-party life expectancy report. And life settlement providers come to me and my partner, Brian, almost daily by email or by phone, showing us cases that might be suitable for our investment. And then we review each case individually. So we don't do this sort of a macro analysis. We actually look at each individual policy and we read the medical records for each individual policy as well. Not because we are trained medical professionals, because we're not, but we are relatively smart guys and we're very good at pattern recognition. When we review medical records, like the more sophisticated managers in this space, we're looking for anomalies. We're looking for differences between the life expectancy report and what we're seeing in the medical records. And we like to buy cases where we think that the life expectancy that's been provided is a little bit long. It's a little bit optimistic for the individual. So we do very granular ground up analysis on each of the cases that are brought to us by other people.
Wow, sounds like a lot of work. And it sounds like you're quite good at it. What are other kind of main attributes are reflected at Lanegate Advisors in terms of what you look for to invest in, and what does the investment look like?
Yeah, I think the overall attribute of investing in life insurance should really be thought of, or can be thought of, as a form of a credit strategy. You are actually buying promises to pay from large investment grade life insurance companies. So it's kind of like a fixed income. Some people have described this as a form of alternative fixed income strategy. It typically has relatively low credit risk for the reasons I said before. You're buying life insurance policies, which are the most senior obligation on the balance sheet of life insurance companies. And the market will only buy policies from life insurance companies that are rated at least investment grade. So it's relatively low on the credit risk spectrum. And I think one other attribute of the life insurance investing is that it is a less liquid, although not completely illiquid market. It's not as liquid as stocks and bonds. We can't trade out of positions intraday, but it's very easy for us to sell policies in the open market if we choose to do so. It just takes a little longer. It can take a couple of weeks to do so, but it is not a completely illiquid strategy, but it is slightly less liquid than other stuff and provides, as I said, this alternative benefit of being diversified away from traditional sectors.
One of the things that our viewers are going to care about really is it's about timing. Why now? Why would an investor care today?
Well, I think today, especially today, meaning in the last few days, we've seen, well, since early COVID, right? Since March of 2020, where we saw a massive sell-off in the equity markets, followed by an equally massive recovery, we've seen the stock markets pretty much go from strength to strength. However, in the last few days, we've seen a significant amount of volatility around the recent surge in COVID and potential interest rate movements by the Fed and other central banks. And I think that has pointed out the wisdom of having your eggs in more than one basket. And so a lot of people are coming to us now and saying, hey, we've had a really good time in the stock markets. We think it's time to diversify, to take some of those gains off the table and to reallocate them into areas like your own, like life insurance, that are not volatile, that are not subject to the same swings in the marketplace.
Great. So talk a little bit about who makes an ideal investor for Lanegate Advisors, and quite frankly, how do you find them?
Well, we are a small boutique manager. Our goal is not to run billions and billions of dollars in this space. It's not, frankly, we don't think it's really a billions and billions of marketplace. So all of our capital raising has been done through our professional network, all the people that Brian and I have met over our careers, in addition to referrals from our existing investors. All of our investors to date are either family offices or high net worth individuals, or in some cases, ultra high net worth individuals. A fun fact for me, having been a financial professional on the non-investment side of banking most of my life and the capital formation side of my life, we were introduced by one of our clients to a hedge fund manager about 2 years ago, who very quickly understood the underlying thesis that you and I were talking about before, that this is really non-correlated. And this gentleman runs several $1 billion of other kinds of assets for his clients. And he invested in our fund with his own money. And now we have, I think we're up to 9 different hedge fund managers who have invested their own money in our fund because they understand the uniqueness of our strategy and the strength of experience that we bring to execute our strategy. So I would say our typical investor is a reasonably sophisticated, high net worth individual who is looking to diversify their exposure.
Terrific. So this has been a fascinating story for me because this is a new area of the marketplace that I quite frankly have not had a lot of familiarity with. Any closing thoughts, anything else that you would want our viewers and investors to take away?
Yeah, I think investing in life insurance, which is what this really is something that is becoming increasingly accepted as an alternative strategy in the kind of credit and alternative investment or alternative fixed income space, as I said before. And it's definitely worth everyone taking a look at it to understand where it might fit into their portfolio.
Wonderful. Thank you, Michael. This has been a great interview. a fascinating area of the marketplace for us. Thank you for telling us your story. We thank everyone for joining us today on another Context Conversation, and we look forward to seeing you again on Context 365. I'm Eric Knoll, CEO of Context.